Good morning, guys. So I had issues with my remote desktop. It was going so slowly, and it turned out it was Google Chrome, and it was actually eating up all my resources on my remote desktop. So um, hopefully I fixed it. If it continues to be an issue, then I'll have to contact the support for the remote desktop, the VPS. It's worth noting that we're dropping on our technical scores. We were quite high at the beginning of the week. We were in the 80s, now we're 37. So we want that to come down quite a bit more. And then we're going to look to get involved in indices on the long side. But we need that to come down, probably down to 15 or 20. And now we've got to note that we are quite extreme as well on the sentiment. There's 17 people selling indices versus the one person buying. Now, what we tend to see on our QDB system, we see it get to about minus 20, minus 21, and then that's the very limit of the bears, and then they get destroyed, and then we see a top, and then we'll fall. So we've got a little bit more of a squeeze to go before the bears completely give up. And once they've completely given up, then that will be the top, and then we'll probably puke a little bit on risk, and then this will drop, and then we're going to get a good entry. And that's the theory anyway. So hopefully my remote desktop's going to be fine, and we'll have to see. So we'll start with gold. Gold's been a little bit naughty. We have to remember Friday can be like a payday scenario sometimes, and we have to remember that the US yields are probably going to be rising because of the BOJ and the ECB. So the dollar's probably going to do fairly well today, potentially. And because of that, it might put a bit of pressure on gold, despite it being a buy. And so we're looking at 1946 for support, perhaps 1948. Actually, this should be holding because they've sold it. Okay, so yeah, so they went long. We could probably draw a box there as well, can't we? Add box. It's a little bit slow. Yeah. What's tricky, isn't it? It's really, really tricky to map. So that will probably do, right? And there's one here. So if we were to pump, we'd probably come up to here for resistance. And the reason for it is that they just went long here, and they really got punished really badly. So, I mean, admittedly, it has made a buy, but it's probably looking at fundamentals like the US yields, the Dixie, stuff like that. The general dovishness from the ECB and the BOJ hawkishness, and just they're sending quite a lot of shockwaves in the market, and the dollar's probably going to appreciate a little bit, and it's probably going to put a little bit of pressure on there. So be careful about this, even though it's made a buy. All right. DAX, we are very, very, very extreme at 11% long. All right, so it's probably going to, if we have one more pump, it probably mean that might be like a top, because there's no one else left to destroy. It's very, very skewed. We're looking at 80-20%, like the Pareto principle. We've definitely exceeded 20%. And we could probably argue it just sideways. We haven't really got the crossover, have we? 11, 10, 11, 20. If they sell it, this number comes down, it's going to be a buy. All right, so very, very bonkers. I wouldn't recommend getting involved here. I'd probably wait for a big fall, big flush, and then we're looking for longs. Up here, it's just a bit risky. It could be a sell, but it's just so tricky, isn't it? I mean, you don't really want to be fighting. If you just zoom out, it's like mega, mega strong. So you don't really want to be fighting the trend. You want to be really sort of going with the trend, and the trend is definitely up. So I think what we'll probably do is wait for the technical scores to really dump, and then we'll look to enter longs. But I don't know if it will be DAX. It might be a US index, perhaps. It might be a little bit safer because we got like this horrible data from Germany and stuff like that. The PMIs were really ugly. So they went long, so we can draw a box. And yeah, I think it's here, or maybe here. Yeah, there's a doji here. We can just map that one. Sometimes they go across a couple of hours, the crossover, so it's quite hard to map. But the doji is normally it corresponds to the crossover because there's that uncertainty, and the market participants are uncertain, and what happens is that we get the trigger here, and sometimes we probably find it does correspond to dojis quite well, and that's that. So that will be a resistance to the S&P. So 4585, 4595, I guess you could say. US fairly. And I'm quite happy to report the robot has done very well the last few days. This Monday was really bad because we had a bad formula. So I'll show you the robot. We can draw a box, and then that'll be it. So it looks like my VPS is not so slow now, which is nice. It was going so slowly earlier. Where are we? Probably this one, maybe. I've lost it. Okay, let's go back, get the rectangle here. And I'll just show you the robot, and then we can close the video, and then we'll be back for the COT data on Sunday. Oh, come on. Yeah, I guess that'll do. Ah, it's annoying, isn't it? It just got slow all of a sudden. They might sell it, and then therefore we can create a box below, and that'll be a support. So keep an eye on that. I'll show you the robot, and you see that we're flat, and so we can come to the account history, and this is what we did yesterday, which is fine. And we are down quite a bit on the week because Monday was awful, and that has to do with a bad formula in the sheet. I don't know if I'm about to show you because it's going to be slow. API. Oh, I don't know if you just heard my cat there. API. Oh no, it's just getting slow. But basically, we should have had a absolute reference on our formula. All right, hopefully I can show you. God, horrendous. I was struggling for about an hour today with this remote desktop, and essentially we were missing some dollar signs, and that was it. And now we've got the dollar signs in. It now means that this formula is locked in. So if anything breaks, it won't break because the dollar signs are there. These are the absolute references. So if anything happens to the sheet, this will still remain locked in, and so that's the logic there. So what will happen is that it needs to detect a large shift for a day, but the failure rate has to be high, and they're the two conditions, and that will ensure that it does check those two conditions. It's basically saying you must check this, you must check this, and before we didn't have that absolute cell reference. So that explains Monday's loss. Quite frustrating because we had an excellent week last week, and we would have had a good week this week had it not been for this, but now the fix is in place. It should be fine, and that's it. So remember to trade safely, and I'm around if you need me. I won't mind at all. Any questions, any suggestions or recommendations? Perhaps you might have got a query on the bubbles or something like that, then let me know. And note that they're very long on the Aussie. All right, so we're probably going to see a little bit of Aussie weakness because the fact that retail guys are long and they've added long. Okay, so hopefully that makes sense, and I'll speak to you guys soon.